Good afternoon, ladies and gentlemen.
From here now.
First of all, I want to thank Mr. Bornoz for the opportunity to give us
No, you're right. Shut this off.
tonight.
Thank you.
So we, after dry, now we go to the web. We go to tanker market that is affected a lot the last years. We're going to talk about Crude. We have here our panel distinguished members of the crude oil sector. It's Mr. Thomas Trovato, Head of Investor Relations of International Seaways, that operates 78 vessels providing energy transportation services for crude oil and petroleum products. Mr. Petrone, Vice Chairman of Navios Corporation, are known also for their dry bulk cargo transportation. They are known for immigration and maritime finance, mergers and acquisitions. Mr. Burke, CEO of Ridgebury Tankers, a dynamic and resourceful shipping company with growing fleet of high-quality crude and refinery tankers. Unfortunately, we don't have here the fourth member, Mr. Brian Gallagher from Iona. He had a small accident, so we wish him a quick recovery. So, tankers already as also all the other sectors, we have a lot of changes that are related mainly with environmental issues, but geopolitical changes that affect tankers a lot. With the tankers rates, we have seen that were difficult the previous years, especially with VLCCs. From the beginning of the year, we saw especially Aframax and Suezmax to have quite high rates that reach even to 100,000 per day. VLCCs at the beginning were even negative earnings, but the last months after the summer, we saw weak recovery. So the war in Ukraine is still going on. We have seen the changes in the trade pattern and affecting all the trade of crude oil. The question is how this is affecting your fleet, and what do you think as the period? Do you think that this will be prolonged, or soon we will see the market go to normal? So we can start with Thomas.
Okay, I think particularly in the crude fleet, we also own product tankers as well, so I could do a little bit if you don't mind. But I would say, particularly with the Russian trade, there's been some displacement, but there is a good amount of upside for the tanker business in transitioning to longer haul tonnage. I think maybe a third or so of the Russian barrels that head to Europe have moved or been displaced over to Asia. And on the product side, I don't think there has been any at this point. So that's about 1 million barrels a day. On the crude side, I'd say maybe there's been 1 million barrels that have been displaced going from Russia to the Far East and India. And then the Europeans are sourcing from the Saudis, from West Africa, and also from the U.S.
Yeah, geopolitical events are always been with us. We call them black swans, right? And so we've got a flock of black swans since 2001. We had 08, 15, 20 with COVID, and now 22 with the war. It's interesting that they originate outside of shipping, but they affect our demand mostly. I would say, to put the Russian numbers in perspective, right? You know, they're by sea they're 8 million barrels a day. They're probably only about 7.2 these days, if you look January, February to now. But there's a swing factor, right? You're going out to the Far East. You know, I think it was 5 to Europe. Now you're going only 2 or 3, and that's going to drop off soon, obviously. I think that to put in perspective, I'm going to throw OPEC into this. Is that all right if you're talking Russia? I think I want to compare the two. So OPEC's got a cut. 2 million, it's not really 2 million. It's going to be maybe circa 1 million. 40 million barrels go over the water every day on crude. Take one out, that's 2.5% volume discount. But I think what we're doing, our research, and what we're seeing is probably about a 5% ton-mile increase. And that's the way you actually measure the strength of any, whether it's dry, wet, or containers, the ton miles versus supply side. So.
This is the big one. I mean, we don't know what's going to happen, of course. And to reiterate what Ted said, it's not what you, it's always something outside of the industry that knocks us up or down. And it's rather boring to cite all the statistics, but I think the fact is I've never seen it where the dynamics are this great. The underlying fundamentals, the order book, we all know what it is, the order book, the Chinese demand is down, the market's in backwardation, SPR is down in the US and around the world, and storage overall on the commercial basis is down around the world. So we have been expecting this as an industry for some time. A lot of money's been bet on it, and we're kind of waiting around for it. And what supercharged the whole market is this whole Russian disaster, which has helped the tanker market. So looking to this winter, which is about as far as you can see with any reality, it should be a really, really strong winter on the crude side. And on the product side, as Tom said, the oil is going out of Russia into China, out of Russia into India, and then those barrels are being refined and sent back in a different form, in the form of diesel and other products. So it's increasing ton miles around the world on everything right away. And the winter hasn't started yet. So we're really excited for the next 6 months, a year, possibly 2 years. But the lesson we've all learned is it's really not different this time. It's going to be, or if it is different, it's going to stop at some point.
I want to go back also how we discussed the dry bulk. We've heard China continue to be difficult with all these lockdowns, and after also what we heard in the Communist Party committee, this case with Taiwan is a little bit dangerous. Hopefully that will never happen. So we have this affects a lot the transportation of crude to China, I believe, and this will continue. And also heard OPEC announced last week to reduce their production. So how do you feel that China is affecting your fleet? And do you think that this OPEC decision will stop the upward trend of the rates, and we see downturn in there?
I think OPEC's in the business of maximizing their pricing, and that doesn't mean to drive the world into a recession. I mean, they're a pragmatic group, and they're out for themselves, as they should be, and they seem to be comfortable around an $80 a barrel price point, and that's what they seem to want to stabilize. So I have no idea how they think or what they do on a daily basis, but if they've said they want to keep the price of oil stable and maximize their returns, that doesn't mean that if there's a sudden demand for oil in the world, they're going to say, no, we're not going to release it. The amount of barrels available, the excess capacity is pegged somewhere around 2 million barrels a day, maybe it's 2.5, but it's basically controlled by the Saudis and the Emirates. So it'll all come out of there. So they can control what's going on, at least on the price level.
Yeah, I think, listen, China has its issues. There's no doubt about it. But I think what we do at Navios, being a diversified fleet within the container, dry and wet, we're looking across the board here. But certainly when it comes to oil, they can't get over the 4 million barrels a day production internally, domestically. So they're going to have to continue. The world we live in is much different than many of us in shipping have had the last 20 years. You haven't seen long-term deals. I think the shorts have made a portfolio switch, whether it's dry or wet, because if you fix ships for the last 20 years If you were short, oil major, major oil trader, grain houses, if you did 80% spot, you were brilliant because you were doing great. Today, I'm sure the portfolio manager sat down and said, we need to take some long-term coverage here. One, because of inflation, and two, because of geopolitical risk going down. And so I do think oil is very strategic, right? In the U.S., we're a bit blessed here because, back in the States, because we're oil, we're energy and food self-sufficient. Who else is that in the world? The grain's going to have to move for the dry bulk. The oil's going to have to move as the consumers go from more buying goods to services. So I do think, in spite of China, I think it's going to maybe be a somewhat difficult winter, not for the tankers. I do think we're going to have they're really moving now. The V's are starting to, it's funny, the dry and the wet sort of, the strength came from the bottom up, which is very unusual in shipping. But I do think we're going to have a good year. I think China will come out of it in the spring. They have these lockdowns that go through the winter. Let's see what happens when this, communist Polprio does their election. They turn these into laws in March, and I think it's going to be positive for shipping going forward.
And I think it's more than just the world's been accustomed to plentiful cheap oil. It's been accustomed to plentiful cheap commodities and plentiful cheap money. And all those things are changed at the same time. And when I said before, it can't last forever, I'm really enthusiastic about the next couple of years. But, we get out over our skis sometimes, and it'll...
What's great about this time is I think we're being saved from ourselves with the IMO regulations. Yeah. Because cyclically, from World War II, the markets moved up, we all over-ordered, we say we don't, right? And then all of a sudden, 2 years later, when the ships delivered, the market's now peaked and on its way down, it exasperates the downfall. Here, certainly on the wet and the dry, that's not happening. And I don't see it happening to any degree going forward. So it's not different this time.
It's a paradigm shift.
That's right. You're absolutely right.
So let's go back also to the environmental regulations. All the previous year we're talking about the excise AI, now the time is here. For tankers, maybe the reduction of speed will not be so high if you see the trade pattern that your vessel can agree with, but there will be some because at least half of the vessels do not comply with the current trade pattern they had. So we have three ways. One is reduction of speed. Thankfully, it's not so much for tankers. Some vessels that will be very difficult to comply maybe will be scrapped, and actually we have seen extremely low scrapping rates last year. And for part of your fleet that is somewhere in the middle, you might need to make some investment. The question is if this investment is viable. Depends how much money you have to invest for each vessel to make it to operate for a few more years. So I want you to tell me for your fleet, your existing fleet, how is the situation, how do you see it for the next 5 to 10 years? Thomas?
Yeah, I think our average age is around 9 years old, so it's not the youngest fleet in the world. I don't think of the shorter term, I think your question is more appropriate for more of the longer term. If we were to keep some of the older vessels, I would expect that there might be some general slowdown. But I don't think it's like we've had before in the past where we have to, spend a couple $1 million to put in a ballast water treatment system. This seems to be a little bit of a more manageable regulation.
Navios owns 49 tankers, but 188 vessels in total. So we're always renewing our fleet. Our MO has always been to be at least 1.5 to 2 years younger than the average fleet age, and we're doing that. And I think we'd probably pick up the pace going forward because of the regulations. And Stratos was talking about before in the other panel about some of the banking, I wouldn't call them restrictions, but tightening up of loans because of what they see ahead of them. I think there's a residual value risk for the owners on this. But I do think the charters are also looking at a very high volatility on the upside on the freight. So there's a lot of things we have to look going forward. But I think certainly for us, I think we welcome the CII. We think, you know, it's better to clean up, it's better to clean up the environment than not, right? But we don't get subsidized like the airline industry did in the States when everything fell out of bed. We have to do this on our own, so it's going to take some time.
We don't have a concept called fleet renewal. We have individual investments in ships, and we have different investment groups. And when we look at that investment in that whatever particular group of ships is, we look at what the requirements are and what we project the CII and any other change in whether it's ballast water treatment system or whatever it happens to be in those particular vessels. And I know the ships we have right now for the foreseeable future, the reduction in speed, we back tested what we would have to do as far as speed reduction, and it's minimal. I think maybe a handful of days a year we would have needed the excess power in the engines. So I think that for the world fleet, the first year or maybe even two, it's not that strenuous. Right?
You know, I think the tanker fleet average speed is about 11 and a quarter. I kind of disagree with the panel before a little bit. I think, you know, next year is the measuring year, right? But if you're a charterer, you're an end user or a supplier, and you're fixing, you know, A, B, C, D, E, right, on the CII. D is and E are failures, but a C next year is not a C the following year, right? A C today is not a C tomorrow. And so you have to make sure you've improved your fleet going forward. And that's something I think, that pressure is not going to come, the initial pressure is coming from regulators, right? But the pressure is going to come from the end users, and certainly the ones who are in the West who public companies, and they're going to want to go cleaner quicker. So I think you're going to start seeing some stratification as you have between scrubbers and non-scrubbers, that type of thing. But it will come, and I do think you'll be seeing that more from the commercial side than the governmental side starting next year. We'll see.
Yes, as you said, a C today, 3-4 years will be D. So yes, you need to make some measures, but we have to see also how the market depends also, I believe, how there will be the availability and the demand for the vessels.
I mean, for us, it's vitally important because we try not to play the spot market, right? We do short, medium, long-term charters, time charters, according to where we are in the cycle. And if someone's going to fix us for 6 months and it's a C vessel, I mean, if I'm the charter, I'm going to want to guarantee that you're going to be a B next year. To do 3 or 4 year deals, people are going to have to clean up the fleet and modernize the fleet. And I think in the long run, it decarbonizes the fleet, it modernizes the fleet, but I think to Robert's point, in the short term, it's going to slow down the fleet.
Okay, so this is the headaches you have for your existing fleet. So when we go now for new vessels, we see that it's the tanker market, the order book is extremely low, it's below 5%. This year, the orders for all tanker fleet, both crude and clean, was 4 million deadweight, and the previous decade we have annually around 26. Of course, there's many factors, except from it's also overcapacity in the seabeds, because as we know, they were building a lot big container vessels and LNG carriers in the years. Then is the question of all the owners want to build, because there is this uncertainty about the new fuels and what vessel to build. About your companies, do you think to have a new building project in the near future? What do you think? Because for new fuels we hear a lot. I mean, LNG is the one that is, let's say, the market is here. Today is almost 1 out of 2 tankers are ordered dual fuel with LNG. And we have also some other fuels that we could say that the market is not so ready, like ammonia and methanol. What is your way of thinking about the new fuels?
I just, when you invest money in anything, you want to have as few variables as possible. And the variables that you have, you need to narrow in as much as possible. And if the biggest variable is fuel and engine type, then where's the encouragement to buy a new ship? You know, we rebuilt a house some years ago, and we were told, oh, you should put some conduits here for, you know, these types of lines that are coming in, fiber optics and all the rest of the stuff. So we spent the money to future-proof the house. And we didn't use a single one of those things because whatever came about was beyond our imagination. So to go out and order a ship and spend an extra $5 million or 10% for what might happen to future-proof it, to say, hey, I'm green, I think is a waste of most of the $5 million. And I think that's a strong part of the reason why only 1.8% of the tanker market is on order, because people don't want to do it unless they get some charter from, you know, an oil company who wants to be part of, you know, that visionary type of thinking that really doesn't drive the bottom line. You know, it's, I mean, we participate in the second mouse theory of business, and that theory goes like this. The second mouse gets the cheese. Sometimes it's the third mouse that gets the cheese. But the first mouse usually gets squished. So
Exactly.
you're going to use that one, Ted, I know.
I like that. I'm going to use that. Could you write that down?
You can all use it. It's a really good one. But it's true. I mean, you know, new builds are difficult enough to make sense out of. At any point in the market that I've ever looked at this business, a new build is really, really difficult to make sense. And if you add some huge number on top of it to have dual fuel installed or dual fuel ready, I think it's even more difficult. I mean, I don't know of any point in time when first movers in shipping made a fortune. I can't think of one. If anyone does, I would really like to hear about it, but I just don't know of one. So that's my thought, candid.
I agree, Robert, 100%. There is no first mover advantage. I mean, the example is scrubbers, right? When our technical team, we were going to jump in and do scrubbers, and they said, wait a year, it'll be twice as good at half the price. And that trend continued going forward. Now, when it comes to LNG, it's still a fossil fuel, right? But it's only 30% less.
It's for the next 15 years, then we need to do something like this.
Yeah, but there.
And the ships last 20, or maybe it's going to be 25 now.
Exactly.
Actually, if you build one ship today, this could be until 2050, or if you make the order.
Right.
So you have to consider how would be the requirements at this moment, so to see what you will do.
Right. You can't build for a fuel that we don't know.
Buy a 5-year-old or a 10-year-old.
And retrofit.
The value of the older ships are going up faster than the newer ships for that reason, because nobody knows. And the uncertainty is, you know, is you're not going to put money on it.
You know, LNG, and there's carbon capture out there too, right? There's carbon capture being installed. But that's the same as LNG. It's only about 30% less pollutant. They're not capturing all the carbon. So we can't get to where we're going to go without leaps in technology, right? There's got to be a leap. We've got to find the fuel of the future. Is it hydrogen? Is it methanol? You know, is it ammonia? Ammonia is pretty. But I do think you're going to see a combination of those, and with carbon capture. And it's not going to be. I think other panelists said the same thing. It's going to be a mixture. But my guess is probably blue hydrogen, right? Where you make it from LNG. Green is where you make it from the solar and the wind. But I think you'll be seeing that. I think they all have their problems. Hydrogen is, you have to store it very cold. There's a whole bunch of issues. The good thing about LNG is the infrastructure's in place. The bunkers are there, the ports to it. I think there's 140 ports. You're going to be over 200 by next year. We may be talking very differently next year that LNG could be the answer if you add carbon capture on top of that. So who knows what the answer is going to be.
Nobody expected what would happen with LNG price. Because the first vessels that are already LNG fuel, the most of the operators will use it. Exactly. Because LNG became so expensive. So when you make one investment, you pay for the VLCC 20 million more, and you make your calculations when you will have your capital.
We've done some alternate fuel engines on our new buildings, but it's because we have coverage and the charters are paying for it.
Yeah.
Yeah.
That's the only way you do that.
That's exactly how we have.
Yeah.
We did a dual fuel. And,
Yeah.
we did
Michelle
it
drove
with
it.
the time trial. Yeah.
Right. Mr. Shell wanted to say they,
What
yeah.
do you think?
I echo what these guys are saying. It really, a company, a shipping company just blindly investing on a speculation is is such a big investment for so long a time that you couldn't, it's not feasible to do unless you had a partner with it.
The truth is that we should have an holistic approach. I mean, how I'm thinking, because even if you use methanol, the green methanol, you don't save so much. So when you reach green or green methanol, you need enormous amounts of energy to produce it. So we need I think at least 1 decade and maybe more to have infrastructure to make this alternative.
And the carbon density of the new fuels is nowhere near what you get from fuel oil.
Right.
So there's a volume issue. I mean, there's so many issues. Now we've done that on LNG with all the new buildings, but I don't know where you're going to store it, how you're going to transport it. It's the infrastructure just isn't there yet.
So really a good investment, let's say, in carbon capturing to improve carbon capturing and continue using.
No, a good investment is a 5-year-old ship. I mean, seriously, a good investment is a 5-year-old ship. As an investor, I'm not going to invest in carbon capture unless I make money out of it. I mean, the problem with the whole thing is it's a misallocation of resources unless we know where we're going. That's the problem. And I can't go to an investor and say, hey, guess what? We're going to save the universe. We're going to buy a new ship. We're going to spend an extra $10 million because it sounds great. It doesn't work. You know, the money tells you what to do. And the money tells me not to buy a new ship with some alternative source of fuel that doesn't make any sense, whether today or in 5 years. It just doesn't do it.
We can get 20, 30% of the way there with, EST, energy saving technology. We think all the panels have talked about this already. You know, the gas return heater generators. You can do stuff with the paint, but you can't get to where we want to go with the technology that's in front of us today. But I'm just a big fan of human progress. You know, I remember the 70s. We were going to run out of oil and we were going to have too many people. And
we had a new ice age coming. That was the three things in the 70s.
Right.
Ice age, ran out of fuel, and too many people.
I think they were 0 for 3, right?
Yeah, over 3, yeah.
So, what science today isn't science tomorrow a lot.
When I was investing in carbon capture, I mean, not ship owners, because we ask everything to ship owners. The whole system that made money, that pay money now to make new fuels, to produce new fuels. They can produce, they say, better carbon capturing systems, and this to help to use fossil fuels for more time, and because it's under the know and it's safe still.
Yeah, I mean, with Exxon behind it, and you have a guy named Bill Gates behind it, and there's some others out there, so a lot of people throwing a lot of money. Doesn't mean you're going to get the answer, but I do think, by next year you may have carbon capture that's, not only 30% better, it's going to be 70% better, and then everything changes.
Okay, so we see for a new building, it's a little bit difficult at the moment, it's very unknown, the environment. We see a lot of sales and purchases. I think tankers the last 2 years dominate the sales and purchases. Last year was almost 9% of the fleet that changed hands, and similar values we have this year. So I want each of you to tell me if you think it's a good time to buy, and also, of course, we have to see that the prices are quite high. In some we see vessels with the prices 30% higher than the beginning of the year. So do you think that it's a good time to buy or sell? What is your company at the moment?
Is that to me? Who's that first? You're in the first seat. You should be going first all the time, Tom.
I've been going first the whole time.
We're talking right over you, Tom, please.
Yeah.
Listen, we bought at the top of the market in containers, but we had coverage, right? You can buy. There's good deals that can be done, but you need coverage. I do think that, look, it's interesting. Look at the asset values of VLCCs. The worst VLCC market in 30 years, and the asset prices not only didn't go down, they kept going up. So, the world's kind of upside down a little bit here. If we had money to put in, listen, we're renewing the fleet across the board, wherever we see. It's good because we have the ability of cross-segment opportunities with diverse fleet to take the money from the one sector we're making money and take somebody in distress and get some deals like Navios has always done over the years at sort of the bottom of the market there. So we don't have a particular fleet in mind today or tomorrow, but renewing the fleet and buying the ships, and I think Robert's right. We've done new buildings, a lot of it because we have coverage, but it's like buying you want to buy a used car or a new car. You lose more value in the new car as soon as you drive it off the lot. unless you have somebody time chartering your car for 5 years. But I think, Rob is right. You know, the sweet spot on the S&P is really the 5 to 7-year-old vessels. It's always been.
Yeah, I mean, I think with the way asset values are today, it's hard not to be a seller because in shipping you've kind of held on to those. You just want to make the earnings as they come in. But you know, in terms of longer term, I echo what these guys say. The sweeter spot is really the older ships. So if I was buying, I'd buy an older ship. But you know, with the fleet our size, 78 vessels, I don't mind tweaking a few and selling some off.
Robert, I think you're quite sensitive. What do you think?
So we were a little bit different than my colleagues that left. We really manage money for people and we invest in shipping. So last year we bought, or the last 18 months before the market took off, we bought 4 Vs, 3 Suezes, and 8 MRs, all secondhand. And we've sold a lot of them. I think we've sold 16 ships in the past 3 months as the market took off. Because those investors and those assets had made a lot of money. Some of the investors who had ships 10 years finally doubled their money, and then some of the investors who had their ships 10 months doubled their money. So, you know, it's like the thing in the Bible where the guys go out in the field and the guy pays them 10 talents to work from dawn till dusk, and then the guy moses along, you know, half an hour before the sun goes down, he gets paid the same amount. Well, that's how our investors felt. So they decided it was time to get out. Having said that, I mean, the dynamics I think particularly for the Suez market and the Afras is really exciting right now. Sorry, but I think a little less so than the Vs, although they're all in the same complex. I think the long term, not that the Vs are bad, the Vs are now leading the way, but I think this Russian disruption and what's happening in the Atlantic Basin is particularly exciting for the Suez tankers. And we're very bullish in that area.
I think you're right. I think the LR2s and Aframaxes, the LR2s and the LR1s, had the ability to switch between the crude and the clean, and that's what really sort of started strengthening the crude going forward, and I think those are in a good position. You know, we've stepped out and done some Aframaxes which we've never had before, so they're going to be on charter the Chevron, but I would do Aframaxes going. I think the order book on the Aframaxes might be the lowest out of the sectors. I'm not sure. I think that's sometimes looking over 3 fleets, I get my numbers confused between dry and wet containers.
Okay, thank you. I want to ask you something. We see now general the discussion of decarbonization does not affect only shipping, is the whole fuel chain will change. So you go to some owners and they want to build CO2 carriers, for example, or if we are going to use new fuels, of course we will see change in the cargo that the tankers will carry. Maybe this will be less crude oil and...
But hang on a second. We saw Doug had a graph up before that showed that, and I've seen this before. You look at the energy stack over like hundreds of years, and the amount of peat moss that's burned today is the same as it was hundreds of years ago. The amount of lumber or wood that's burned today is the same as it was hundreds of years ago. And then the other new forms of energy, coal, just stacks on top of that, and the demand for energy across the world has continued to increase, including oil. Oil has come down a few percentage points over the past 30 years. So, you know, for me to sit here as a ship owner and start to, you know, think about what could possibly be the next fuel that's moved in the next generation of ships after we finally decide on what fuel it takes to run those ships, and then we got to have ships to move the fuel of that we haven't built yet, is just not an effective use of, you know, my time as somebody who manages money for people who want to invest in ships. I mean, it just doesn't make sense to me.
Yeah. No,
Other than that, I think it's a great topic.
I always agree with Robert. I think, listen, hydrogen, it's like an LNG carrier. You got to carry it at 253 Celsius negative. I mean, ammonia, if I'm on a crew, I'm not getting on an ammonia ship. A little leak and we're all going to die, right? Because there's a whole bunch of issues that are problems going forward. And for us to sort of, you know, piercing through a fog to see what's going to happen down the road, you know, like Strato said, and we talk about in Navios, nobody has a crystal ball. Nobody's going to know what's going to happen. If you we asked the last panel about a year from now what's going to happen. If you would have asked them a year ago, who would have said a war? Who would have said there'd be, okay, maybe we thought inflation might be coming, but not, we all said transitory, at least our Fed did, and they made a huge mistake. So things are going to change dramatically. The thing is you have to be in position to make the change. You have to have the cash on hand and the fortitude to go make some of these when it strikes. And I agree with Robert again, the first mover usually gets it wrong, right? You have to make the mistakes.
Okay, I agree with you. I believe that we have crude oil spot for longer time, and we see how the energy crisis in Europe make the European countries that usually they are leading the environmental regulations to ask for more fuel and more coal also. So we go back to even more dirty to make the people not be freezing during the winter.
To Robert's point, as he said, maybe the percentage goes down, oil and coal in terms of the mix, but the consumption's up. The nominal number's up. It's been going up.
Yeah, and we're in the business of making the next decision for the assets we have, not for thinking about what might be needed in the future. I mean, that's not a good business proposition to get, whether it's your public shareholders or my private shareholders or your public shareholders to invest in. They don't care. All we want to know is what are the rules? Tell us the rules and we'll follow them. And then we can handicap that and make the right investment choice. That's our job. And if the government wants to misallocate trillions of dollars of assets to figure out some new type of fuel, then God bless them. And when they do it, let us know what it is and we'll move it, or not. That's my view.
You can't drive a car looking through the rearview mirror to see where you're going ahead.
Yeah,
It just doesn't work.
Yeah.
So just to close, I just want a statement from which we see we have 2 years with very bad rates in general for tankers. Now the market looks positive. Most of the people in the market believe that this will continue for 2023. What is your perspective? You will see that are you positive for the next 1-2 years for the tanker market, or it is volatility making this unknown?
How do I see the market the next 2 years? I think the order book has always killed us, and it can't happen. And I never say can't, but I just don't see the order book increase in the next 2 years, and I see demand increasing, and that's nothing we've seen before. So I think it's going to be a really good 24 months.
I think Robert's, again, exactly right. I think, I think China sort of comes out in the spring maybe, and going forward, the oil consumption continues to move forward. And the order book might grow slightly, but I don't see it. So, we have to do probabilities. The probability of us sitting here next year, what I tell our traders is we don't mind, we can do 3- and 5-year deals. I mean, you don't see 5-year deals unless you get inflation. And we're seeing a lot of the shorts coming to us for long-term deals. Having said that, I've said to the traders, it's okay to do a 1-year time charter because you can get the maximum number, and we will probably redeliver the ship into a market that's no worse than it is today.
I think echoing, what's very good about today's market, as Bob and Ted said, that really the owners are really constricted in terms of creating new orders. So that's fantastic. I also think that we have extremely low inventories, and that's super helpful for our industry as well, both crude and product. And I think, in the OECD, maybe you have 60 days forward of inventory, and that's very helpful, especially when you have big disruptions that we've recently had. So.
And the U.S. SPR is at historically low levels, dangerously so.
Okay, thank you all. It's very nice to close positive. Thank you everybody for your attention.